Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all invited to visit the Trader Lab. Trader Lab's a community of like-minded traders who come together to leverage their collective experience. It's not about any individual trader. It is about the leverage of the community. We've all walked in your shoes. We've all evolved and developed using similar tools, and over time, if you're like most of us, you've found that we all have winning trades. The problem, actually, with winning trades is that can keep us on a path of just trying to make it better. Now, the problem, at least in my opinion and experience, is that we all have random winning trades, but do we have a statistical edge or probability that puts the odds, if you will, on our side versus the gamblers who have winning hands? Same as the casinos. So the business of trading and the objective to create sustainability and a potential career path is really what the Trader Lab is about. Differentiating, trying to fix maybe a defective process and bend it to fit our psychological and emotional needs. That is to predict, to look for confirmation, to be right, to get validation, etc., of self-worth, intelligence, and whatever else it is, which is emotional and psychological versus a business. Now, the business of trading is quite different than what our perception or fantasy is. And of course, there's all kinds of chats and gurus and, holy grails out there, the only one thing you need. And I think if you've been around in the business for any length of time, there's a lot of nonsense out there. But everything, because it has random winners, looks like it is the sure path. Well, it might be. And then again, based on your experience, is it? We try to answer that question for you in the Trader Lab, and you're all invited to Trader Lab. There's no cost. And remember, it's about the business of trading. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is about the business of trading. And the idea of this stream is to help you understand how the market works, why it does what it does, and how at times you can get in alignment with it. It's not about being right. It's not about predicting. You can't. It is about statistical probabilities. And statistical probabilities, you might say, is the potential secret sauce. What is secret about it? Most traders are playing a video game. So if we understand gaming, and this is what this business is, the same way casinos operate, then let's decide together which side of the financial table we are going to sit on. Are we going to sit with the gamblers who have random winning hands, or are we going to sit with the house? Even though they pay the gamblers, the casinos pay the gamblers over time. In a random distribution of outcomes, they extract the dollars from the gamblers. So it's up to you to find out, does a successful or proven business model, gaming, can we take that basis of a business model that is proven and then overlay it on the trading business, which really has the same elements? We're in an environment that's 100% random 100% of the time, same as the casinos. The only thing they control is how they play the games. And that's what structured trades are, or as you guys refer to them as setups. And I'm going to explain today why, depending on your time frame, sellers, and why we want to be short today. Now, this goes against what many of you think, and the thing that dictates the answer to the question is time frame. Isn't that an interesting concept? So let's move this forward. Now, by the way, guys, I'm in not Costa Rica, that's later. I'm in Mexico. I'm streaming from a laptop. Things can get, as they say, funky. So please forgive me. I'm running multiple monitors here, and you should try carry-on luggage with that. They give you a dirty look. First of all, Bruce's pilot program. We always talk about statistical edge, and Bruce's pilot program may give you some assistance with developing that. There is no cost for that. It's open to everyone in the Bookmap server. So you can go take a look at that. You need to register for it. Also, we have a contest going on. You can win 3 months of Global Plus. Winning means free. I like free. To you, it's about a $600 value, and it includes data. All you got to do is use hashtag FreeBlueJacket and throw a screenshot of your trades on Bookmap and drop it with that hashtag on X, Instagram, or LinkedIn, and annotations, what order flow behavior, why did you take the trade, drop it in there. Remember, if you're in TraderLab, you're already doing this. So if you are doing it, maybe get them in there and win 3 months. And if you haven't done it yet, what are you waiting for? Now let's get on to the market. I'm going to do again my best, and let's see what's happening. Now, this is where we broke out. This is the recent all-time high. Now, the thing to understand, of course, there's buyers and sellers, but let's look at basic market mechanics. The market goes up to go down. Why does it go down? To rebalance. Because as an example, sell stops. I think sell stops here, sell stops, market goes down, cleans them out. What happens down here? We get shorts in the market, and the weak longs get thrown under the bus. Market goes up. What happens here? Previous all-time high. Market goes down, clean out the longs, and then it can continue up. Market goes up to rotate and then cleans out everybody. Then what? Now the market is short. What happens here? Market goes down, finds its buyers, inventory grab, and then squeezes the shorts. Market goes up to this objective. And you guys who follow the stream, these are targets and how we use them. I'm not going to spend time with it today. Market goes down to get the fuel or the shorts. Market goes up, gaps. Now we squeeze the shorts out here. There's a gap. So sell stops here. This day, sell stops under here. The gap, right? The longs, what do? Clean them out. Inventory grab. Buyers are here. Where are the shorts? Up here, up here. What do? We gap. That means these buyers have not been abused. Is it possible we might come back and test the breakout and also fill the gap? Another gap yesterday. Off to the moon, Alice. But what does it mean? The market is out of balance. What happens if we get lopsided? The market needs to potentially rebalance. Now, part of the thrill of trading is we don't know. But let's look at one other possibility. Tops. And I'm not saying this is the top of the top. Nobody knows that. Not my job, not yours either, to pick the high of anything. However, notice when we make all-time highs that they're just exhaustive tops. They're not excess. This is what an excess top might look like. Now, it may only gap up, rotate, and continue, or something else. And I'm only saying the something else because this is what market tops and more major tops can develop. Now, again, I'm not saying it is, but you'll notice the change in behavior. This is the thing traders need to be aware of. Now, what else are we aware of? Let's look what else. There's a gap here, which means stops are under the breakout. There's a gap here. These longs. So the longs from here, the breakout buyers here, sell stops, sell stops, sell stops. What does that suggest? The possibility to now do what? Go up to go down to go up, go up, go down, and then go down to go wherever. Is everybody with me? This is primary market mechanics. Now, part of the thrill, naturally, is not knowing what it's going to do. You didn't think you could predict what it's going to do, did you? I know when I started with measured moves, and I thought, yeah, it's going to do this. It's going to do that. Oh, there's a head and shoulders. We all start that way. Don't worry about it. That's part of learning how to trade. The thing is, drawing your trend lines, redrawing your trend line, moving it over a little bit, we've all done it. We want it to, quote, fit. Doesn't work that way, in my opinion. Now, maybe it does for you. Now, let's take a look. Now, before we go any further, if you're in TraderLab, pull out your grid for context. The key to this market, or one way to at least think about it, is the condition of the market. Now, I just went over the higher time frame condition. By the way, if you have questions, please post them. There is a delay if you're in YouTube, and don't forget I'm on a laptop. Things can get very strange. And good morning, everybody. And if you're in TraderLab, post them. I'll do my best. So grid sheets out. Okay. So what is the condition of the market? Well, we're gapping higher. So we're opening out of balance. Now, what is balance? What is this balance thing? Well, where's yesterday's high? There it is, right there, the gap. So right above yesterday's value area high is the gap. So we're opening out of balance, out of range. All right, Tom, let me see. What does that mean? The market's out of balance. So is the market responsive? First question. Now, what are responders? Now, there's initiators and there's responders. The responders want to go, oh, it's a gap. Let me get this little bag of cash and I'm out of here. I'm going to catch you much later. Thanks for playing. And here's a coupon to the buffet, and you can have that too. Now, we also are going to get the buyers. And the buyers, we have to kind of differentiate who are the buyers going to be. If we gap higher in an unbalanced market, then the potential, and nobody knows the answer, okay? So let's not get into this being right. There's no being right in trading. There's no knowing. Now, you don't have to take my word for it. You just have to look at your results as a trader. The answer lies in your numbers. And the fact we all have random winning trades keeps us on a path of trying to make it better. Well, the problem with randomness is, because it's random whether you have an edge or not, is you can still have all these winning trades. I had loads of winning trades, but the equity is leaking out of your account. So winning trades going the wrong way. What good does that do you? And, of course, you have sequence of winners, so the equity goes up somewhat. But over time, you're leaking the equity. And that's assuming you're doing a good job because you're not trading with an edge. So the idea is, now we want to understand the context. So is the context, if the market opens out of balance, so we're gapping, it is an out of balance, we're not inside of yesterday's range, what happens? Do we get the profit takers or the responders, and do we begin to rebalance? That's my thesis for today. Now, I have to be very clear about this. My time frame, and time is not really the element here in the intraday developing time frame, but in the higher time frame, as I showed you on the chart, the market's out of balance. So what tends to happen is, at some point, nobody knows where that is, the potential exists for the profit taking. Then it's, do the buyers come back and buy the bargain in the store? This is like shopping. Or do the profit takers, the longs in the market, perceive that their profit, their open trade profit, is at risk, and we're not going to get new buyers, we're going to get sellers or profit takers. Now, a profit taker is not the same as somebody who's putting on or initiating positions. So, however, if we get enough sellers and we run out of buyers, then we can get directional, and that profit taking can overwhelm new buyers. I hope that makes sense. And don't forget, in a higher time frame, we have nothing but thin air below us. Is that making some sense? And nobody knows. So let's get over to it's going to do this. The market's not going to do anything. It's going to do what it's going to do. I'm going to show you. My first trade was a short. I posted this in TraderLab. I don't call trades because I take stops. And what do you need my stop? You could take your own. But I have a plan. And the fact I have a plan has nothing to do with paying, as they say, because the casinos pay the gamblers. So I accept the random outcome. I emotionally am not thrilled when I take a stop, but I have two things at play: my feelings, which are going to be the same as yours, and what I do. They're different because I accept the random outcome. I cannot predict it. So then I have to say, well, what do I know? What has my experience taught me? What might happen? And if I can recognize scenarios What will I do if it shows up? So right here, we open in our gap, we get some buying. Okay, I have resting liquidity here, and I have the ETH high. I have a high probability, and I have to go back to context in a moment, but I'm going to give you some statistics. Getting to the ETH high or low has a 97% probability and a 79% probability of getting here. 79. However, if I open here, I'm not going to go for that as a target. I'm looking at this liquidity and this probability to get tested. So my first thing is I'm not getting long. I'm waiting to see behavior and interaction. This is how order flow can help you. Now, I don't know. I'm here and I'm going, I don't know. But let's look at the order flow. So there's my buyers, and this is only 10 seconds in. So 10 seconds, I think I blinked my eyes twice. I can't tell anything. Look what happens here. The sellers now, this seller is overtaking these buyers. Why didn't the market go up here? Because they are being absorbed. It's very fast. Now notice the rotation here. I have more sellers and I have a larger downside rotation. Now the market's out of balance. Is it responsive? At the moment, it is. What does it mean? Fade the gap back into balance. What is balance? It would be into yesterday's range. So, okay. So now I'm looking for a short, and I have no clue. So I'm looking at this. I'm going, I don't know. And it's fast, 20 seconds. I cannot trade in 20 seconds. I'm lucky I'm conscious. So test of the mid. Liquidity. So I see the liquidity here. I see the liquidity starting to come down here. I always spend a lot of time on the open because this is like a microcosm of behavior. And I see it break away. So right now I'm looking at this. I'm going, okay, I got my sellers. Now the next problem, and it is, for me, is I want to get short. I don't have a location now. So now the chin is on the desk and it's going, oh, crumb, FOMO, right? I got to get short. And the word gotta is in there. What is that? That's the FOMO language. I got to get short. Now, this yellow line is the developing volume point of control. A point of control is where the highest volume is. Now, the thing to understand, this starts at 0 volume at RTH open. And basically what I'm seeing, and let me show you microstructure. Now I'm going to take you down a little bit in time frame as you think of it. I don't use the clock, so there's no time frame here. Think more like Russian dolls or Matryoshka dolls. Now I can't do anything with this until hindsight. So I have to have structure. Let me explain. I cannot spend a lot of time on this. You can get this more in TraderLab. Oh, yeah, okay. I'll leave it like I do this so you can understand. Now, I don't use indicators. I use order flow. And what is order flow? All it is if I have a buyer, why isn't the market going up? There's absorption here. There's a passive side. That's your limit order book. And you got to have a passive participant. These are market orders. That's what represents delta. The green bubble is a buyer. Now, the thing is, the buyers are made up of by stops and market orders. So the thing about delta is it's not a complete picture, okay? So I have market orders, aggressors, I have my location going to the moon, see you later. And now I have my aggressors coming the other way. Here's the sell stops. Now here's resting liquidity, and you'll notice the sellers are absorbed. So my resistance at the moment is right here. And the reason is the buyers were here. The absorption was there. The sellers took control here. And you can see the buyers are here also in the delta. And you'll see how the delta is going down. Delta going down with the higher price is delta divergence. All you RSI, MACD fanatics all understand divergence. Same thing, just different. It's delta. So now I see the change. So I'm seeing the behavior in the order flow. And notice here we have high selling delta. And why doesn't it go down? Because the buyer. So now I'm looking at the delta, and the delta is giving me insight. This is where order flow comes in. Let's also look at what I know. This is like your convenience store down the street, your little mini mart. I know, and you guys have them everywhere. You go to here in Mexico, they're Exos. They call them XOXO. And in Spain, I don't remember what they were, but Costa Rica, they don't have an XO. They don't have anything in Costa Rica, at least where I go. No, I'm trying to think. No mini mart. At least not where I go. Anyway, this is the retail price in here. Think of this like a store. Oh, it's on sale. I'm not paying that. Retail price, break away. Now, going up in time frame, this is the retail price for all the volume, multiple time frames. Break low, buyers, rotate, mid. Now, it can do anything here. It can come across and squeeze out these responders, or if I can't get back here and I get additional selling, I'm now going, okay, I want to get short. How do I get short? Watch. Where's my resistance? It's here, right there. And this was the price that was too high. This is now market mechanics. Watch. VPOC migration. Now, right here, jaw on the floor, going, it's two-sided trade. When it comes back up here, my resistance is there. Now it pops above. And right here, no clue. I want to get short, no clue. Watch. Sellers hit it again. Now, what I found was what? Buyers were here, sellers hit them. Buyers come back, shoot out at the OK corral, come back to resistance, can't take out this high. Sellers again. Now I'm convinced, for my plan, not predicting, that I need to get short. Watch. Now, this is the retail price. This is too low. I break below it. Now, this may be complicated to you, so don't worry about it. Just watch. Mid in VWAP. This is now resistance. It's right here. So I have resistance. I'm going to mark it. All this is the open. Now, you might be losing your mind here going, Tom, come on, hurry up. This is reading the story, and it's here. So I have this, teeth chatter, sellers take control again. I have two-sided trade, and I'm out of balance. And I can come out either side. Don't know. Watch. VPOC migration. Let's look at the language. Microstructure, too high. Break low, micro trigger. There's the high volume. This is the retail shopping experience. It's the same volume in here. I come up here, same structure, break low, trigger. No short for me because it could do this and do that. I'm just telling you. So now I come down here. This is where the buyers were, over here, and I get my buyers again. So I know this is support. This is resistance. This is resistance. Now I get VPOC migration. Let's look at what it says. This is shopping. Trading is shopping. It says new retail price. This is too high, and now this is too high. So this right here can be a short or here. For me, it was here. Not there. Could have been. But, being a responder, a little more teeth chattering. Now, the target, now here's the next piece of our context. This is yesterday's high. So we're in a responsive mode, and we're fading this gap back to balance. Now, right here at yesterday's high and the value area high, this is decision moment. So this was a target here. So the short was, for me, from here to here, and the liquidity. And now right here, I anticipate profit-taking gap fill. And that's logical, to fill the gap and get a counter rotation. Now I have this to look at right here, a low volume node. So basically what's happening here is this now is my outside edge. And I put a label on this thing. And then we're either going to bounce up, come all the way back across, and Tom is thrown under the bus, or we're going to continue lower to the next targets. This is critical. If I get inside the range, and and I have targets below, let me tell you what they are. There's an 81% probability to get the ETH volume point of control or the retail price. There was a 67% probability to get here, and taking out the first hour's high or low favors the upside. But what is the context? The market is long. That means what? Responsive selling potential. So I'm only on shorts. Other traders are taking longs. It's a wonderful thing. So here's the gap. Now, still on the shorts. We have a single at 12, which is a low volume area. This is the primary targets. Okay. So here I'm only giving you what I did today. I'm not saying this is good, bad, or indifferent. I'm just following a plan. So that's it. Now right here, this is my primary target. And remember why? The overnight volume point of control, 81% probability. So this right here, I laid everything off here with one exception. And this, we got into a spirited debate, which is wonderful. This is what Trader Lab is about. How do you trade this? Well, let's look at the story. This is too high. This is an outside edge. Let's follow the auction and let's go back to our grid sheet. What is it? We fade the gap into balance, and then we're going to watch for a bounce on the retest of the previous range, which was up here. And we're also going to look, what else is one more here? In the previous value area. And then there's this range hold. We stay inside. So now remember, this is not mechanical. This is like, it might do this, it might do that, and I don't know. So this is too high. This here is also a Trader Lab short continuation. I'm not going to get into it. It's more advanced process. It's right here. So this could be an add, subject to your advancedness, if you will. I always suggest developing traders start out with mean reversion. In other words, outside in trading and in alignment with the direction of the market. There are other traders in Trader Lab who are more developed, who will trade both sides. So what I do, or at least what I suggest, let's say, is use these processes and behaviors as targets. You could be done with your short trade here, or subject to your plan, this could be a long. Now, what I tend to do, only because my plan is not your plan, I trade higher time frame. Now, what's a higher time frame? It's all in the eye of the beholder, right? So for me, I know this. I'm going to draw this in here. Might as well put it in. Is resistance. For me, not for you, me. That's one piece. Why? Because I got under it, and it's resistance. Resistance. And here's the other piece. This is the distribution up here. Too high, too low, retail. Think of this like your mini mart. I'm not paying that. Tom, I'm out of here. Okay, what about this? Too low, too high, retail. It's too expensive. I leave the store. I break under here. I come up. This is support or resistance. Since I broke below it, if it's too high, I continue down. Targets. Now what? We ran here. We accelerated right there. This acceleration creates something called a low volume node. A low volume node means the market went, we're out of here. Now there's a couple possibilities with this. Let me explain. If that's too high, I'm not paying that. This is too high. I'm definitely not going to pay this. You can, and out here becomes an outside edge. In other words, I can fade this in something called mean reversion to come back to there. So I'm looking at this and I'm thinking, well, where does this thing fall apart? Out here. So, and this is conflicted because some traders are going to take this. These are actually structured longs in the Trader Lab. But here's where the but comes in. The but is, what is the context? If I'm inside yesterday's range, do I want to take longs? Which I can. Is this a counter trend trade? What is the trend? Great question. Higher time frame, the trend is up. Higher time frame, the market's out of balance and the longs had not been abused. Don't you think they deserve a little abuse? A little profit taking, a little squeeziteria out? In other words, the longs have stopped trailing. Is it possible we can get inside yesterday's range and squeeze some of the weak longs out? Now, whether or not we come across the range and fill the gap, not my problem. It's just a trade. So for me, and it was very spirited discussion. Traders are getting long. I was getting short because I'm trading a process called mean reversion, which is outside in. So let's look what happens now. And this is not a right or wrong thing. This is what's so interesting about trading. So this is called VPOC migration. Let's go back to the concept. If these auctions in all time frames, this one's too high and this one's too high. And what is this? Isn't this the same thing except it's larger range? And this one now down here, this one is too low, right? Notice what happens here. Sellers are here, buyers are here. Break high. Now right here, when I look at this thing, I'm going, well, okay, we might, if this is now the retail price, if this is too low, variable high volume node, then I can come back across and around. And this becomes rotational trading, and it's called mean reversion. This is the outside edge. Now, again, guys, you don't have to be doing any of this. So there's some traders who take long to come back and go wherever. And for me, I'm looking at the longs, and I really want to stress there's not a right or wrong. So this, for me, sets up shorts for continuation down here and to come out the bottom. So my trade is to come out the bottom. So I'm not taking any longs at this point. I'm only taking shorts. So let's look at the shorts. Where does this thing fail? It's out here. So as long as I'm under this, I can sell it to come back here, but it has to qualify. It has to have the range. So I'm only taking shorts. So for me, I'm holding a runner, just talking my plan. I'm not saying this is any good. It's just mine. You don't need to be doing any of this. You could just be out of the thing here and in your Barca lounger. You have to be able to recognize behavior, and you also need to have a plan for reversion trading. And it has to qualify from where you enter to here. So it might not have enough range. Okay? I can operate in this, not the end of the world for me. These are all shorts. So this is where I get my seller. I have my range now. Let's come back here. What's here? Microstructure. Too high, too low, trigger, test, reversion to there, back here, absorption. And I'm just holding, again, an add and a scale. Not saying it's a good idea, just doing it, Notice where we go. Sweep. Now, we have another trade in Trader Lab. Now, I'm flat here. Now, I'm done. I haven't even seen this, so I'm out. Now, I'm going to tell you, so that was my trade, okay? That was me, and I can't trade during the stream. And we have a single down here, and we have the ETH low. Now, we missed the ETH high, right? You know that. What is the probability? Well, the higher probability is the ETH high. But because we didn't get it, it sets up the ETH low. 97% probability to take one or the other. So, Tom, what do you do with this? Well, we're going to aim for this. The low is here. Now, you get the sweep here. Now, the sweep and the IB are right here. So now, when you come out the bottom and you're under here, Now, for me, I'm going to tell you, for me, the trade is to come out to this liquidity, which it didn't get to. Okay. And that's no big deal for me. It's just what it is. So out here, once we come back in here, then for me, this trade is over. Okay. Now we have another trade in Trader Lab called the IBF. The IBF's a mean reversion trade coming back the other way. Once you come across this, then the possibility is to come here in there. So let's see if that actually what that does here. Okay, mean reversion. Now remember mean reversion. What is mean reversion? Excuse me. The sweep sets up the reversion, and it's a trigger. Now this is a structured trade I've shared in Trader Lab. I made these up many years ago for myself, and it was like everything. I did a lot of research. I built systems, and building the systems didn't solve the problem. I thought optimization would solve the randomness, but it just did it better. Just kept the randomness. So it was walk forward testing and data mining and all this kind of stuff. So anyway, did that. And when I say I did it, we're not talking months, we're talking years, So I thoroughly learned what worked. And the problem, of course, was everything works inconsistently. This is a mean reversion trade. So the outside in from above was reversions coming out the bottom to take out these longs, right? Then it was to come out here, which it didn't do. We get the sweep, we get a trigger, and right here is the test. So the longs are here, but you could also get long there. You're at the IB, and that's the target. And then we can come across the range or not. This is the primary target. And all it is, it's the same thing. It's reversion, except we're coming from the other side. One moment. How we doing, guys? How we doing in YouTube? Is everybody conscious? I understand unconsciousness. So now we are done possibly with our responders, and now the buyers have come back. The primary objective was here and to come below, and we found extreme. Let's go. I'm going to try to drag a little something over here for you. So remember, the outside edge was out here, and the trade was outside in. And then we had this as an objective. This was the primary target. And then we had an extended target down here, which is called a single. We are now back here. So we may either come up here and squeeze the stops out here. And depending on how far up we go, we're either going to stay in rotations or we're going to squeeze out these guys. Don't know. So that's not my job. So my job now is to come back and look at this, which is this low volume where we broke away. And so that's my trade. So now I know I'm in a mean reversion from the other side, the IBF. So we get a tail here. That's an excess. And you'll notice the buyers came for it. This is an excess. So now that gives us the long back to here and then around. So now the shorts who have the shorts in here are vulnerable. And that's what can create two-sided trades. So now I got an excess there, and these were responders, and I have an excess here. So now as we come back up, we have to monitor the low volume or outside edge. So that's where we're going. So at the moment, what's your plan? Do you have a plan for this? Has it changed? We are in two-sided trade. So right now, the last trade's along, and you have to manage it because we don't know how far it might come out. Now, let's look. And this is yesterday's high. We're still inside the range. Okay. So this gets a bit tricky. And I always suggest for developing traders, you don't try to hit the home runs. you hit the singles and doubles and singles and doubles. This is about profitability, not predicting anything. I certainly have no idea where it's going to go. And I gave up many years ago predicting anything. I just try to get in alignment, and then it's trade management. What do we know? Let's go back to what we know. Where is our resistance? It's up here. So as long as I'm in this area, and there's stops here, so I can pop here into the buy stops. So out here, if I pop into the buy stops, then I need to see if we get stops and absorption, and do the buyers continue, or do we come back and revert from the other side? That's my trade. It's not a recommendation. I already know where my trade might show up, and it's not a hard line. It's an area. Same thing with the IBF, which is a reversion trade from the long side. And remember, we have excess right now from, the sellers, that tail that I just showed you. So now we're in balance. This is the retail price. What does the market tend to do? What's too low? What's too high? The last place it was too high was up here. So if I come out here and this is still too high, and remember where did it go? Here. I thought I did this already. See how this aligns? So this is my area. So I need to see what happens with the liquidity. I mean, this is just, by the way, what's this thing in here? Why did this come in? You see the response? Skewed the book. No intention of trading. It was just like, here, let me put a lid on the pot. And then when they put the lid on the pot, it can skew the book. Let's see if there's a lid. They have any other things going on here? No. So we're going to watch this. So right here, the long is to there. Now, for developing traders, you could just take the IBF to there, because that has a high probability, and you have to vet that probability for yourself. So the trade can be from here to there, and you're done. What else do we anticipate? Mid sellers, and there's a sweep, and VWAP sellers. This is balanced market, so it can come out, come back. So right now, this is still mean reversion for me. And for you, it might be a long to go out the top, and both can happen. Is that logical, guys? Does this make sense? Can you see why there isn't one way to trade? There's just the part where your thing, it's kind of like your edge. FN, we're in balance. So no, there's no IBC on this. At least for me, the sweep right here and the tail. Now I was looking at this, don't forget. So no, it's an IBF. In the IBF, I'm getting the question, why wouldn't you short? Because I'm in two-sided trade. Because the market is long, and I don't know, and I still don't know if we're going to come down here, but this is excess. So, and because we didn't spend time. It's one of the ways to look at this thing, speed. And that's nuanced, this is not something, so let's talk about the IBC. There's two trades here, guys. There's two possibilities, in other words. There's two trades. By the way, why didn't I take it? Well, I'm streaming, but I wouldn't take it. This has a lot to do with it. And the sweep. The sweep gives me a lot of information. And now right here, I came in. So let's look. Where is there a short? Let's see. Is there a short? How would I get short? Well, I have this. And now I break high. This is my test. So let's say I took a short. And where am I taking my short? Would it be here? So I take a short here. Let's say I take a short here. It has to get under here. And then you'd be going for the ETH low, which I just missed, and the single. So let's talk about this. You take a short. This is too high. You get a sweep here. So I get a sweep there for the counter rotation. I get a sweep here for this. I got to get under here. And as far as I know, it's going to zero. Okay. This is my short, or against here. I take a stop. Okay. Then what? Well, if I'm back above the IB and I have absorption here, look at this selling, and it doesn't go down, then I know right here, if I, and right here it's looking wonderful, okay? Right here, I need to stay under this sweep and under here. So this was the swing high. If I get popped right here, I can get long to here, because instead of an IBC, it's an IBF. I go, okay. Now for me, no short. But if I took it, I take a stop, and then I get long. It's just one trade. The thing about it is, this is a big deal right here, this absorption. So that really is a big deal. It's a lot different than this. Let's look at this down here from an order flow point of view. Look at this. So right here, sellers going to zero. Oh my goodness, get the champagne out. It's over. Sweep. Now, where's my sellers? So I get my buyers, my buyers, my buyers. It's all buyers here. Now, here the sellers take it again. Sellers. Now look here. Let's compare. This is divergence. Now nobody knows till hindsight, so don't worry about it. I got more sellers. You see the delta, bigger bubble going on here than I have here, but I have a higher price. So what it's telling me is I got more sellers, but there's absorption going on here. So the sellers are trying here, and there's more sellers here, but I didn't go down. So this is a possible problem. Okay. So if I was looking for the short in here, and let's say I took a short, well, right here though, when I see this, I'm going to be looking to see who's taking control. And I'm telling you, even if I took a short here, I'd take a stop. So but the IBF is the trade. Now, and the trade can go right here. Now, here's the other piece. You come up to mid and VWAP, you're going to get mechanical retail traders. We need the mechanical traders. And remember, the gamblers get paid. So it's not right, wrong. One thing about traders or anybody in this business, if you think right, wrong, it's your right, wrong. It's not somebody else's, because it's time frame specific. For me, I trade larger rotations. And when I see a long in the market, if my perspective is I want to be on the short side, I use the longs for trade management. Other traders will take the long. You see, now in this configuration, this is a valid long for me, but not to go to the moon. I know where my outside edge is, and I could just as well just take it here and be done with the trade. Has anybody in Trader Lab ever thought about, if you're trading reversion, that it's mean reversion, this is where you go, and you could be done? Does that over time, if this is a high probability because this is the mean, and the market, if it gets stretched out, comes back to the mean, then either right here, we're going to get mechanical sellers and we're going to come back outside, or fall out the bottom, or we get mechanical sellers and then they get squeezed. What's above the mid? Stops. What's above this? Do you know what this is right here? This is a weak high. Did you know it was even there? You should know. But we're inside yesterday's range, so we need to get outside of yesterday's range to continue with the squeezeteria. And where's our resistance again? It's here. So this is the dilemma, because we can't predict. So what I know possibly is there, and you have to look left. Write this down. You must look left. Now, of course, it's your choice. You don't have to do anything. What is this? What's sitting here? Stops, stops, stops. What's out here? Stops. So if I take a short, which I wouldn't here, location, location, I don't trade in this configuration from the inside. I trade from the outside for the reversion. Outside in, not inside out. Me. You can do whatever you want to do. And my thing, I'm only talking about me, is I started trading in 1980. I've developed something called patience and detachment. And that's very hard for us because we always have FOMO and, oh, we want to get the trade. And what is that about? I'm not about getting a trade. I'm about taking intelligent risk. And there's different degrees of edge. There are trades with very no edge, because if I have to put risk on here with a stop here, where am I going? Maybe I'm coming back here, or maybe the stops that are here are going to get squeezed out. Is this an A plus trade for me? Or is my A plus trade after these guys get taken out over here? Because these are buyers sitting here and buyers are sitting there. I cannot tell you what it will do. I can tell you what it might do and why. And if it squeezes, then I'm going to use the squeeze, the stops, to see if I get absorption on an outside edge, and I'm going to revert back to here. That's my trade plan. Me. And guys, I'm not saying this is a good plan. I have, works for me. I have found less trades means less risk. Not being concerned about if this goes down and takes the low of the day out and I'm not on it. It doesn't matter. There's going to be other trades today, and if not today, tomorrow. In fact, if you guys watched the stream yesterday, you saw that even though I wanted to get long and I don't remember now, I think I had two responsive, same thing, two shorts in the morning, and then it was long, but the long didn't set up during the stream. I needed a counter rotation. Not that I didn't read the long trades, but they didn't qualify because of range, right? In other words, it wasn't qualified, and I was sitting here for a good part of the stream trying to explain why the trade didn't qualify, and it wasn't about trying to get on the trade. Well, after the stream, the market counter rotated, took out the weak longs, and then set the long up. And then we made, I think, new highs or something. So that trade the plan actually worked. It just didn't do it within the window. Life in the fast lane doesn't matter, does it? So today it's really the same thing. It's if this goes down and takes this out, that's fine. Doesn't matter. It's not my trade. I will not trade from the inside. I only trade from the outside because we're in a reversion market. That's why the long from here to there is the priority. And I really want you guys to think about, again, not predicting, why this is not a short. And it might be the short of the century, and then we take out, we go down and take out yesterday's low. It's possible, but not, I don't think it's really on the agenda, but it could be. So if we're in a two-sided trade, and here's what can give you the hint that it's two-sided at the moment. The VWAP and the VPOC are in alignment. That means it's balanced. The mid is up here, so we can get mechanical sellers out here. What I like, only from bitter experience and paying the price of being a retail or developing trader early on, was it used to be sell the mid. Well, how can I sell the mid in a market that's in balance? If I'm in a trending market, I can do this. But I also know now that these sellers, these guys, and these guys have buy stops here. What is in my interest? Joining the gamblers who have winning hands or playing an edge? Do I have an edge here? No. Do they get paid? Sure. Do they deserve to get paid? Why not? Do the casinos pay the gamblers? Sure. Where's the stops? So if I get new sellers here, buy stops are going to be here. There's the thing that says counter rotation. Don't get short, Tom. Put your helmet on, get in the Barca Lounger, wait for an edge, or don't trade. Does that make sense? I'm just telling you, it's just an idea. It's not anything more than that. And there's no monopoly on being right in trading. Who knows, right? Anyway, Anthony, I hope that answered why, for me, I didn't take the IBC. And even if I took it, what do I know? Let's come back to what we know. Balance. And this, see this? And out here. So what we know is potential for this. So the reversion trade fits the long. And again, to there and this, these guys make it sweeter for squeezing them. So reversion is two-sided trades. So the way reversion works, guys, is the market goes down to go up. The market goes up to go down. So what's happening here is buy stops are in here. That gives you the squeeze. You get your longs. Sell stops are following the market up. You get your shorts. Buy stops are in here. Same concept. Here, you squeeze the shorts. And here, we get the mechanical retail traders, short. They become buyers, and these guys become buyers, and this is my outside edge. So for the reversion trade, here's how you can do this. And I'm always going to say, developing traders, just take this piece of it and then get in the Barca Lounger, because you need to be able to understand this to trade into this. You see? Does that make sense, Trader Lab? Can you guys see why you would take a piece of this and vet it to establish metrics? What is the probability of getting here before taking a stop? Great question. And how would you do this? Well, if you took the short, nothing wrong with taking a stop. I mean, welcome to trading. It's overhead and cost of production. Casinos don't close the blackjack table because because a gambler got paid. Same. Okay, we got to think the same way. This is a business. There's overhead and cost of production. If I took this short, I take a stop. I get long. I go, oh, I got that backwards. But I also know I'm in reversion. At least that's my plan. And you guys know I've been trading reversion all day. Other traders are getting long. Now, this is a long for me, but it's a reversion trade. So it is a long, but it is only primarily here and to get the shorts out. These guys, this to me, I don't sell the mid, only under certain conditions, and in balance, nada. Why? Watch. That's why. How do I know that? That used to be me. How about you? So where do I know? This is what I know. This is the same thing I was doing all morning. Outside in, outside in, outside in, down to here. This is this. By the way, now I'm going to throw a little confusion at you. You ready? If we're trading multiple time frames, which we are, and I'm trading here, look at a concept. This outside in is reversion trading. This is the outside in. Same as this, outside in. So this is the same process. When I trade outside in to here, I'm also trading outside in to here. Now, does everybody understand what I'm sharing right here, right now? YouTube, do you guys understand what I'm sharing right now? Really important. A psychologist? Well, maybe. I'm not a psychologist, obviously. In fact, we have one in Trader Lab. But the only thing he hasn't done is brought the couch. It is a couch, right? Into the Trader Lab because we can't get it through the door. Now, where are we trying to go with this? Where's the swing and where's the stops? It's here. And where was the sellers? Here. We want to watch this. So this is called reversion trading. Now, here's the key. Coming here is reversion. Going from here to there is reversion. Coming from the high volume up top is reversion. Trading to there is reversion. Trading to there is reversion. Trading to there is reversion. And trading to here is punt. Like, I don't know. So the way it tends to work is the market is doing this. What's too high? And there's stops out here. So now let's watch. Now we're getting, yeah, Mexico's going, what are you doing? Whoa. I think, watch. So this is resistance and we took out the top, okay? So no more shorts. Was there news? Okay, well that takes care of everything, right? Russ, how could you get destroyed? I don't understand that. Don't you use stops? News is part of this. You know, this is just the way it works. I can't understand how anybody. Now, the thing to understand, if there's news, all bets are off. This looks excessive, guys. Now, for me, flat, nothing to do. Okay. So this is an excess. Now you have to watch. If that's news, then nothing. Well, we know about that. In other words, we know that they're talking about lowering tariffs. So that's not new news. This looks like a squeeze. So anyway, I don't have anything now. It's outside and this is news. So I don't know at this point how the market is going to behave to this. So I have nothing. Russ, what happened to you? Why don't you post in there what the situation was for you? Is it a strong low? I can't tell you it's a strong low. I think at the moment it is. Uh, we've tested outside edges. Uh, we've come across the range on news. Once there's news in here, I I can't decipher it until it settles down because we took everything out here. This might be excessive right there. Those of you guys who took the IBF long, if you were still in it, that's terrific. Um, this this is an outlier. We got to see now if we revert again because this might have just taken the shorts out, and then we got to see if we can continue or if all we did was take them out and then we come back. So I have no opinion. I don't have a trade. Ross, you still haven't answered the question. I'm really curious what your scenario was on. Well, Katie, why don't you come to Trader Lab? Use the link in the bottom of YouTube. It's a community, and we support each other, really. I share a process. I've been doing this 46 years, but what I do is not necessarily what other traders do. What a lot of traders do in Trader Labs, they take what I've shared and then after working with it for a while, to get the lay of the land, they extract processes that I've shared and whatever else they bring to the table, and then mold it into their time frame. Um, it's always best to start slow um, and trade a larger rotation because it's more forgiving for the risk. Um, we're all going to take stops. We all, you know, it's just part of the random distribution of outcomes. Part of the randomness of trading is news and whatever, the things we know, we don't know. So that's why risk management is always number one. And, you just have to accept it. And so you need to be adequately capitalized. Okay. Uh, Ron, if you're interested in understanding how Bookmap can show you about the iceberg, stops, exhaustion, there's a lot in the Bookmap toolbox. Uh, I, it's kind of how you relate to the market. These are sweeps. These are the sell icebergs. This is when you see absorption. Like here, you have the delta, and I see the icebergs. That tells me that these buyers are being absorbed, and they're being absorbed. Now, the thing about it is, if I have aggressive buying and the market's not going up, then it can come down to here. So, subject to the behavior, and this was news, so that disrupts the auction, we can then revert back here because now it's kind of like, oh, okay. So this might have just been a squeeze. Ron, Bruce, and I'm trying to think the days that he does this because I can't remember. Uh, Several times a week does order flow specifically on Bookmap in different time frames, mostly shorter time frames to help you read it. It's not about scalping is not really the business of trading. Scalping is really more of the FOMO fix and the dopamine. Uh, the dollars and sustainability are not made in this kind of thing because even though we can see it, by the time a trader executes and the risk is out here, what's the potential? And then by the time you cover, you don't even have a 1-to-1 ratio. But that doesn't work, in my opinion. I've been a high volume scalper in the NQ, 100 trades a day. I can speak pretty much to what scalping is about. And it's not for developing traders. When you can stretch the time frame out, you can anticipate where trades might show up, which is not here. This is not anticipated. But you can anticipate and then kind of settle into stalking it and then being prepared for it. Like if you were going to look for a short here to come here, which is not a trade recommendation. I have no trades here at the moment because now this is too fast. I can't operate this. So I just wait for a location where I can see my risk. I now have structure and I can then go for this because this is reversion. Now it's not a trade recommendation because I have no trade. I just sit back here and go, what's going on? Anyway, Katie, if you're interested, come to Trader Lab. There's a link in the bottom of YouTube. There's no cost for Trader Lab. It's open to everybody. Doesn't matter how long you've been trading, what you do, how you do it. You know, really, it's about knowing what you're going to do and understanding that this is a business of randomness. As you can tell, anything can happen at any time, and trade plan. And it's not about one trade. It's about all of them. It's a business. So the casinos don't look at one hand. They pay the gamblers. They look at all of them. And does their plan have an edge? So that's really where you come. So some traders are going to be trading shorter rotations, and other traders, until it changes, are going to trade a different rotation or structure. So we're going to see now if this comes back here to reversion. Because then if that's the case, then this was just throw the shorts out, squeeze, and then we can come back and rotate because this is the mean. Now, the way this would work potentially, and I'm always going to use that term because nobody knows, So this is not a prediction business. Remember, this is an alignment business, right? The possibility is to come here because this was an extreme news-based squeezeteria. If I'm back in here, do you know what this is? And you can't operate in this. This is the IBF from the other side. Reversion. And this is not tradable. For me, I can't operate in the speed. But the behavior, the IB to there, is the same trade, and again, always random, as, let me show you this so you can understand wherever it went. Got to find it. Seems like it's so long ago. Where was it? The long from here to here is a reversion trade. If you were able to get short, which would not work for me, I cannot respond. My jaw's on the floor. Mentally, I'm not aligned and ready to anticipate it. The goal of that, if it was tradable, would be to come there. It's the same trade, you see. So, guys, you can watch this. It's not a recommendation and not a quote prediction. So we have to see. But you also can see, remember I was talking about the mid trade, that this is not a short, but if you took the IBF, this is a target. This is not a short. We're looking for it to come up out here. And then we had the news. So we were looking for this. And then it news, and now this is all jumbled up. So, but the possibility is to come there. Or not, it's just what it is. So we'll see. That's basically trading with a trade plan and trading the auction. And remember, news disrupts the auction. So this is a disruptor. Now, the question becomes, though, is this just a short squeeze and we're going to revert? That I don't have the answer to. So this we have to watch, okay? So it's possible this is too high and we're just going to come back in here and rotate. Or the or is we continue up because the higher time frame trend is up. No way to know. Okay. Dan, probabilities. I think you have to extract probabilities for yourself. If you're trading reversion, which is what this is, then you just have to know there's a probability to come here. This still throws a wrench in the thing. I would, on this situation, I would just be patient. I would just go, because my anticipation is for it to come here. But if I didn't take a short here, I would be okay. I'm very much patient and have no FOMO. Well, put it this way. I feel FOMO, but I don't trade FOMO. I don't trade like, oh, it's going to do this. I can't predict anything. I know this is an outlier and I have to look and see. I'm in two-sided trade. The sellers seem to be doing a little better than the buyers, but now it's kind of even. There's absorption here and there's absorption on this upside. So it's just messy. If we revert, we're going here, but it could do anything. That was a nice squeeze, wasn't it? Let's take a look at this over here. So what we have now, and we didn't take out, yeah, we did. We have what's called a neutral day. Now, in the world of profilage, neutral day means both sides are active. You got a tail down here. This is balance. And you have a tail up here. Tail. We call those tails because they're excesses. So the market can just, and that means both sides are active. So we know we had the responders in the morning, and we know the responders got squeezed out on news. Now, for this thing to go higher, we've got to come back outside here and continue. Buyers above here. If I don't get buyers above here, I can just stay and revert. So that's the possibilities. So if you're going to be looking to short this thing, which is counter trend in the higher time frame, you got to be very careful. I personally could just be in the Barca Lounger now and not trying to fade it because I know that the higher time frame is up and I had my responders already. So I'm not looking to short this. I'd just be passive here because I'm seeing the market is holding this area and we're not reverting. So that is suggesting potentially higher and out the top. I don't have a trade, so I just sit and wait for this. I have to figure out, am I going to get back above here? So I have to be looking outside, but my inclination is not that. It's not the trade. Very mixed, very two-sided. A neutral day, basically what it says is that you have two sides, and we did get this, and we're above the high volume from yesterday. We got our profit taking. We had our gap. We got profit taking, and we found our buyers under here. Once you're back above here, then it was the outside edge at 20 for continuation shorts, okay? Reversion trading. And what happened was we had news. Does the news change everything? It might. So, again, nothing for me to do. That's really it. So there's nothing more for me in here at the moment. Uh, it doesn't mean that I won't put a trade on, of course, but I can't trade this right here. I have to see if my buyers come in when I get up to that IB again. And then, but it's counter trend at the moment. Okay. So, getting short has more risk to it than the long side. Well, I just wait. So this is an area up here to observe. And I do see my buyers in here. I see that I've had absorption here. And now I'm seeing my buyers. Hold on one second. So I don't have any shorts up here. I have nothing to do up here. We do have to watch the high of the day in this, in the IB. So nothing here for me. I'm just in park. And again, I don't call trades because I'm trading a specific time frame and a plan. Katie, why do you like Bookmap over other order flow tools? Well, I've been using Bookmap since 2015. Um, their programmers and their dedication to cutting edge development is ongoing and constant. They're continually investing not only in the product but in the users. I mean, the not only the Trader Lab but the Bookmap server has all kinds of education, and there's no cost for it. Stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior. Um, I've worked with quants, former hedge fund managers who use this tool. They can use anything they want. They use this. Now, is it the best tool for you? I can't answer that, but I wouldn't use any other tool. I'm not saying that because I stream for Bookmap. It's because I'm in the business. And before Bookmap asked me to stream for them, this was my tool. Um, and I had to learn it like every other tool. There's no plug and play, Katie. Uh, developing a career in this business is an investment of time. It's no different than becoming a pro athlete or a high level performer in anything, any business. You know, there's and you know the failure rate for retail traders is very high. A lot of that has to do is they never learn what this business is. They never learn it because they're too busy chasing, the next easy. There's no easy. We all have done that. All there is market mechanics. All there is market mechanics. You see. By the way, what's this? Not a recommendation. What is this? Why is that line on the chart? You're going to ask. It's a great question. Why is that? Because what happened at the RTH Open in the mini market? So what happened? Too high. 69.26. 69.26. The mini mark. Too high. Not a recommendation. This is very finessed, okay? And what am I thinking? Not trading. Thinking reversion trading. Where, now this is an excess. This is, what are you talking about? This is the shopping experience. Now, it is resistance. Now, it doesn't mean you sell it at all. What it means is we know this is news, so that takes the shorts out, and we know this is resistance. I know it. I don't know anything more than that. And it's not a trade I'm going to take. It's a trade I'm going to observe. In other words, I'm looking at the behavior, and now what do I know in the mini mart over here? My buyers are there. My sellers are here. There's my delta. So the sellers took control here, and this is where the buyers got taken. So here, this is the outside edge, and either we're going to come across and keep going, or the sellers are going to reassert themselves. So this is really a key area right here, and the IB. So this is an alignment. So we're going to watch it. It's not a trade, guys. Let's see what it does. This is the location. We have the buy delta, and we have to see what happens with these sellers right here. So what you have is sellers were here. This is a location. Sellers are here. The buyers came back for it. And either we're going to continue the squeeze, or right in here, we're going to rotate down again, right? This is really a key area for it. And I have no clue. So it's not important because I don't have a trade here, but I do have a location to observe. Microstructure right here. And it's either, as they say, it's either going up or down. Wonderful. And not a trade for me. Just a, that's interesting. Microstructure. Now, these can be used a few different ways. It's a little bit, this is advanced. And they're, like I'm saying again, I don't have a trade. Because what can happen right here is we can pop and test this outside edge and then mean revert all the way back, or come out the top. And I'm not saying which one because I don't have a trade. I won't call trades. I take stops. You take stops. It's just overhead and cost of production. But I cannot sell this because the higher time frame trend is up and the responders may have been taken care of. And we have a neutral day. So we can either, and we're coming back up the food chain in here, and the buyers are in here. So nothing. So I have no trade. I'm just telling you. Okay? Hope you get something out of this stream. If you're interested in the Trader Lab, there's a link in the bottom of YouTube. You can visit Trader Lab. There's no cost for it. I do see the buyers in here. So there's nothing here for me to do. The question right here becomes, right here, are we going to mean revert? So when I'm sitting here with you, I'm looking at this and I'm saying to myself, well, it's either this or that. And it goes like this. If this is too high, then reversion, then that. If not, I'm going to squeeze out. This is where the stops will be for any sellers in here. It's going to be up here. If I can't get out here, then I can revert all the way back. That's what I know. I'm not telling you what it'll do because I have no clue. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You can use that if you want to visit. This behavior here is very important to what we're going to do right here. So if I know that, then I trade that if it's alignment with my plan. You see what I'm saying? Not predicting, but observing and understanding the locations. I understand the locations of behavior. I don't understand the outcome. If you do, let me know. But in the meantime, all we can do is try to understand market mechanics. Why does the market do what it does? And do we have an edge under certain conditions? So on this one, and this one is really threading the needle, this is the location for reversion. And it's either a short here, back to the, all the way back to the mean. And I'm not telling you it is, I'm saying it could be. And it would be, it's either a short here, back here, or it's going to squeeze and continue up there and squeeze out. So I have no idea. So it's not a trade for me. I just observe it, I narrate it, and subject to my ability to enter and get my risk off is what determines whether or not I take a trade. So let's watch this here. The stream's going to be ending in a couple of minutes. If you're interested in Trader Lab, use the link down there. Hit the like. Yeah, thank you. There is no cost for Trader Lab. It's open to everyone. Doesn't matter how you trade, how long you've been trading. You know, if you have a magic 8-ball and it works for you, bring the 8-ball and yourself to Trader Lab. We used to have an 8-ball, magic 8-ball on a trade desk. It did as good as anybody else who did not have a developed edge. If you have an edge, all that, this is only a business of edge. It's not anything else, really. So the business of trading is a random environment. That's our problem because we look for certainty. We're wired psychologically, you might say, to avoid risk and seek certainty. So we go on the quest for certainty. You know, more indicators, more time frames. That's a very natural thing that we do, and we try to bend this business to fit the psychological need. Problem, of course, is that doesn't align with the business. So instead, we're the ones who have to change. So we have to change to the business and then adapt ourselves to operate in an environment with complete uncertainty 100% of the time. How can you expect that? You really can't. It's always possible, but you can't predict it. You can say maybe. So maybe it'll do this, maybe it'll do that. Maybe this is too high, maybe we'll go higher. Maybe there's stops right here and we'll extend the high. Maybe we won't get above this and we'll come back and revert. That's what you got, maybe. So maybe it will, maybe it won't. I know the sellers are up here. I know there's going to be stops right here. That's what I know. I don't know anything else. So that's what I know. I know right here, I can come there or I can squeeze out. That's all I can know. Hope that makes sense. Please give a like. Hope you got something out of this. Use the link in the bottom of YouTube if you're interested in Trader Lab. Trader Lab is about building sustainability in the business, a career path, understanding that you've got to walk before you run. And we typically all come into this business with a lot of bad habits because we've been playing a video game and think that trading is a video game and there's an ATM in the basement. I'm going to suggest no, it doesn't work that way. So if you've been playing a video game in spite of that random winning trades that everybody has, but you're not sustainable, then you might want to say, well, why am I not sustainable? And can I change that outcome? Retail traders do not have a high sustainability or probability of sustainability. And we know that failure rate is substantial. So if we're doing what they do, it's probably not realistic to expect a different outcome. So the thing becomes, should we take what they do, learn it, and then reverse engineer it and not do it? Use typical retail trader behavior and make an asset, not a liability. That's why I was telling you and suggesting when we saw the sellers at the mid, that's typical retail trader behavior, and the potential was for them to get squeezed. They did. Why do I know that? Because I think like a retail trader. I don't act like one. I had to learn that. And it wasn't easy because my comfort was in doing what I believed was the right thing to do, not understanding that this is a business of randomness and also a business of statistical probabilities. Please give a like on the way out. Thanks again for visiting Trader Lab. Appreciate you guys taking your time out of your busy day to spend it with me. Use that link down there in YouTube if you're inclined. You won't be harassed, solicited, or otherwise abused. You do need to confirm your Discord username to make sure you're not a spamulator. Keeps the chat nice and calm and keeps the riffraff out. Remember, this is not romper room. This is serious business. If you're interested in the business, I'm going to say you're going to have to come to the lab, change your beliefs, and that's not going to be easy. You have a lot of habits that you've developed. We all have, and you're going to need to change those habits and start leaning on statistics and not how you feel about it. Don't forget to like. Appreciate it. Look forward to seeing you tomorrow.